Hi friends, today I discuss section 82 of Income Tax Act 2025, profit on sale of property used for residence. I am Kurian TC, Chartered Accountant. Subsection 1, where an assessee, being an individual or Hindu undivided family, gets some capital gain from transfer of capital asset being buildings or lands apportioned thereto, and being a residential house, the income of which is chargeable to tax under the head income from house property, has within 1 year before or 2 years after the date of such transfer has purchased one residential building or has within 3 years has constructed a new residential house in India, that means a new asset, then instead of the capital gain charging to income tax, he will get the exemption from tax for that capital gains. That means if the residential building is sold and the income from such residential building is charged to income tax, has sold and the assessee gets some capital gain, and using that sale proceeds or capital gain or both, he buys some property with before 1 year or after 2 years of that transfer, or has constructed new house within 3 years, he will get exemption from payment of income tax. The exemption from capital gain tax or charging of tax under section 67 for the capital gain arising from sale of residential building shall is discussed in clause 1. If the capital gain exceeds the cost of new asset, such excess shall be charged to income tax under section 67. And in computing the capital gains arising from the transfer of new asset within 3 years of its purchase or construction, the cost shall be nil. That means if the assessee arises some capital gain, and using that capital gain the assessee buys new asset, and that the new asset is sold within period of 3 years, the cost of construction or cost of purchase acquisition shall be nil. Example 1, the capital gain is 50 lakhs. The cost of new house is 40 lakhs. Capital gain will be 10 lakhs. That means the total exemption taxable capital gain is 10 lakhs, and balance 40 lakhs will be exempted. Example 2, if the new asset is sold within 3 years of its purchase, the sale value of new house and the sale value of new house is 60 lakhs. The cost of acquisition shall be 0. Capital gain taxable shall be 60 lakhs. Clause 2, if the capital gain is equal to or less than the cost of new asset, no capital gain shall be charged under section 67 for income tax. No tax shall be paid if the capital gain is equal to or less than the cost of new house. If the new property is purchased using the capital gain amount and the cost of new asset is more than the capital gain value or equal to the capital gain value, entire capital gain shall be exempted. And in the second case, if the property purchased using that capital gain is sold within a period of 3 years, and the cost shall be reduced by the amount of capital gain, balance only shall be allowed as exemption for computing the capital gain of from the transfer of new asset. Example 3, if the capital gain is 50 lakhs and the cost of new house is 60 lakhs, entire capital gain shall be exempted from income tax, and the capital gain taxable equals 0. And in the second case, as per example 4, if the new asset is sold within 3 years of its purchase, sale value of new house is 70 lakhs. The cost of acquisition shall be only rupees 10 lakhs, because the cost of the house was 60 lakhs, and we have enjoyed the exemption of 50 lakhs to the extent of capital gain of the previous property, So only 10 lakhs will be allowed as exemption. Balance capital gain of rupees 60 lakhs will be taxed under section 67. Similarly, if the sale proceeds are not used for the purchase of new house or new property within a period of 2 years after the transfer, or within before 1 year of the transfer, or the new house is not constructed within a period of 3 years after the date of transfer, the exemption is still available to the assessee as per section subsection 2 of the section 82, and that will see how the exemption can be claimed. If capital gain referred to in section 1 is not used by the assessee to purchase new asset within 1 year before the date of transfer of the original asset, or not used is not utilized for purchase or construction of new house before filing of income tax return under section 263, then the unutilized amount shall be deposited in a specified bank or institution and is utilized as per the scheme notified by the central government. That is, even if the property is not purchased within the time prescribed, it can be the amount can be deposited in a bank or institution as under the specified scheme notified by the central government. Then the exemption can be claimed. The clause B is such deposit shall be made before filing of the income tax return and not later than the due date applicable for filing the income tax return of the assessee under section 263 subsection 1, and the proof of deposit shall be submitted along with such return of income. Then only the exemption will be available to the assessee. Then still the house is not purchased, property is not purchased, exemption is available to the assessee by depositing the amount uh, in a deposit, tax saving deposit account in a bank or institution, then payment of income tax can be avoided. Subsection 3 is also an uh, enabling section for claiming deduction from the capital gain. For the purpose of subsection 1, the amount already utilized for purchasing or constructing new asset together with the deposited amount under subsection 2 shall be deemed to be the cost of new house. That means if the cost of new house was less than the capital gain, and the balance amount can be deposited in the specified bank account, and together with the cost of new house and deposit amount can be claimed as deduction from capital gain, and tax can be saved from the using the deposit amount and cost of new house. Referring the example 1, where the cost of new house was rupees 40 lakhs, it can be a combination of new house, cost of new house, and tax saving deposit. Both the amounts are eligible together, are eligible for the exemption. And subsection 4, if the amount deposited under subsection 2 is not fully utilized for purchasing or construction new house within a period of specified in subsection 1, then the unutilized amount will be charged to tax under section 67 as the income of the tax year in which the period of 3 years expires from the date of transfer of the original asset. If the amount deposited in tax saving account is not utilized within a period of 3 years for purchase of new asset, then that amount shall be chargeable to income tax. The clause B, the assessee shall be entitled to withdraw such unutilized amount in accordance with the scheme referred to in subsection 2. And if the assessee can withdraw the unutilized amount according to the scheme referred, that means after paying the tax, the amount can be withdrawn. The subsection 5 also gives exemption to the assessee even if he buys two residential houses in India. If the capital gain does not exceed rupees 2 crores, the assessee can buy two residential houses and the entire amount can be claimed as deduction or exemption from capital gain taxation. This section says if the capital gain under subsection 1 does not exceed rupees 2 crores, the assessee may at his option purchase or construct two residential houses in India, and where such option has been exercised for the purpose of subsection 1b, residential house in India shall be read as two residential houses in India. For the purpose of section 1b and uh, subsection 2, the new asset shall mean two residential houses in India. That means the assessee can purchase two residential houses if the capital gain does not exceed 2 crores and where the new assets shall be regarded as two residential houses instead of one residential house, and where the transfer it take place within a period of 3 years, the taxation will be applicable for two properties purchased using the capital gain. The subsection 6 is if during any tax year the assessee has exercised the option mentioned in subsection 5, he shall not be entitled to exercise such option for the same tax year or any other tax year. That means if the assessee has exercised the option available for buying two residential houses and claim the exemption for entire cost of the properties, entire cost for buying the two residential properties, then that option cannot be exercised anymore. Only that only once in lifetime he can exercise that option. It is available only once. And subsection 7 is the cost of new assets exceeds rupees 10 crores. The amount exceeding 10 crores shall not be taken into account for the purpose of subsection 1. If the cost of new asset is above rupees 10 crores, the capital gain exemption shall be limited to rupees 10 crores. The capital gain exceeding rupees 10 crores of the new house shall be taxable under section 67. And subsection 8 is if the capital gain on transfer of original assets exceeds rupees 10 crores, the amount exceeding 10 crores shall not be taken to account for the purpose of subsection 2. If the capital gain exceeds rupees 10 crores and the exemption available to the assessee by under subsection 2 shall not exceed 10 crores at any cost. So the capital gain arising at about 10 crores shall be taxable in both cases under section 7 and under section subsection 8 also. Thank you.